Welcome, ladies and gentlemen, to Commodity TV and the Zuri-Invest event and Zuri-Invest Night. And with me here is now Condor Gold and the CEO, Mark Child. Mark, good to see you. How are you?
Good to see you. Good to see you.
Yeah, it has been several months since we saw us the last time. A lot of things happened. You are now in the sale process of the company. So maybe you can give us a bit of an update. What's going on? How many NDAs you have signed? What is moving the story now?
Yes. Well, as you'll appreciate, there's limits on what I can say. But there's a lot of interest in the project. We have 9 companies, all gold producers under an NDA. We have had 3 site visits to the project. People have flown from all over the world in to look at the project. And that costs some serious money, so we know they're serious. And we now have 4 non-binding offers, letters of intent. So that's the process. So we're now moving to a phase 2 of the sale process, where we hope to get 1 or 2 of those to go into binding agreements. And the key to the higher price is, of course, competitive tension, which we think we have. There's a lot of interest.
Yeah, and I could imagine the gold price above the $2010, $2015 level. That helps also a lot, right?
It does.
Puts a bit pressure on it.
It does help. And other gold companies have got higher share prices. So if it turned into an acquisition for shares, they've got a higher currency to pay with. And they haven't been drilling on the frontiers, as you know. So they have depleting assets, and a lot of people are looking for their next gold mine.
Definitely. So remind us shortly on the project. What would be possible as a first start if somebody buys you, for example? What could they do with the project?
Well, it's construction ready. That's the main message. And not many projects around the world are ready to be built. And this can be built in under 18 months. So we have 2.4 million ounces of gold. Half of that's indicated, half of that's inferred. And half of it's open pit. So we have 1.2 million open pittable and half underground. The definitive feasibility study, which we filed on CEDAR last October, gives 82,000 ounces per annum out of a single pit for several years. But we've also got 2 other pits fully permitted. So we think we can take that to 120,000 ounces. And then if we add the underground in, it gets to 150,000 ounces. And I know your viewers, after we did some of those studies, that the great thing about that at 1,600 gold, you could do 150,000 ounces per annum for 9 years. It's a 12-month payback, gold at a much lower price, which is fantastic, and attractive IRRs of 54% at 1,700 gold, and an NPV of about $430 million, compared with our market capitalization today of just under $70 million.
So what would be the sensitivity? Because you said it was calculated $1,600 gold.
Yes.
Now we are $2,000. That's $400 more.
Yes.
That must have a real big impact on the NPV, right?
It really does have a big impact. And it has a big impact in cash flow, which is equally important, and EBITDA numbers, i.e. for payback. So if you just took the 82,000 ounces, the upfront capex for that is $106 million, because we've already bought the mill. That's a sunk cost, and we've bought the land. So there's $12 million of sunk costs. So on that single reserve pit, by putting the gold price up from $1,600 to $2,000, you have about $200 million extra free cash flow, or EBITDA number coming out of the project. So it's a big difference, just for a $400 difference in the gold price.
Yeah, exactly. That's the double of the capex.
Yes, the payback would be very quick, and that's attractive, and it's a low capex number for someone. It's not, and this was priced with inflation at highs back in October. So we redid all the numbers for very high prices. So we're seeing interest, and even at this conference at the Gold Forum Europe, I've so far met one-on-one basis 4 gold producers. So it's nice not to have to meet them in Canada. Or they're in Zurich, and they're interested in knowing how the sale process is going and so forth. So there's interest.
Okay, super. Wow. How is the support, let's say, country-wise from Nicaragua? Because gold is one of their exports, of course,
Yes.
yeah. And
Yes.
we know your neighbor, Caliber Mining, is the biggest
Yes.
producer.
That's
But how is the view, let's say, government-wise, ministry-wise, that you might sell to another producer, or wouldn't they more love to have you developed it by yourself?
Well, the government's a key stakeholder, and so they have to be managed. We, when we announced the sale process, which we had to on the stock market, 2 weeks later, I met the Minister of Energy and Mines, and I said, the key thing you're going to see out of this after is you're going to have a big gold producer probably buy this asset, and there's going to be a mine in the local community. The government's strategy is to double the gold production in the country over the next 5 years. And gold is already the biggest export, and then coffee, and then beef. So they're permitting everything. They let you own 100%. And I effectively gave him reassurance, as we have done to the community, that part of this process is to guarantee there's a mine there in the local community, and there's the foreign direct investment and the taxes and so forth. That's what the government really wants to see.
And jobs.
And jobs, correct. There'll be sort of 800 jobs or so. So they want to see that, and the community wants to see that. So in terms of community, we continuing we're doing training programs still. We're training 110 people at the moment for jobs in the mine. We're doing social projects. So we haven't stopped anything there with the community. It's just that has to be and continue to be managed. But the government actually, once I met the minister, he said, we're supportive of that process. So that's important.
Okay, then the master question of all questions, will we see then a higher share price when the takeover finally will happen?
We hope so. The key is going to be competitive tension, more 2 or 3 people wanting to buy it. And I think that we've got the interest to demonstrate that. In terms of valuation, the investment bank has gone out with NPVs of $420 million on a term sheet, and we're sitting at under $70 million. In terms of ounces in the ground, we're at $26 an ounce in the ground, as opposed to buying a gold at over 2,000. So we're 1.4% of the gold price is the valuation, and that doesn't include reserves or the SAG mill or
future exploration,
all the upside where we think we have another 5 million ounces potentially. So I think, yes, it should go for a lot higher than currently we're seeing. We hope so.
Okay, super. What do you think time-wise? I know it's a forward-looking statement, but can you give us an estimate? Will this be closed this year?
Yes, I certainly hope it's closed this year. We'd like to see that. The investment bank's job now, candidly, is to move the people from non-binding to binding as soon as possible. But there is a due diligence process that every party has to go through. We know one of the parties has engaged an investment bank on their side. They've engaged lawyers in 2 jurisdictions. So that's starting to get interesting. So as soon as, of course, something comes through that's firm, we will be announcing that to the stock market.
Of course, you have to.
And hopefully something gets announced before the summer months. But we have to see. It is a market. It depends on terms of the buyer and so on.
Absolutely. No, it looks like the markets are going to your favor because to me, I have to feel more and more the feeling within the next 3 to 6 months as we see much higher gold prices, much higher silver prices, and the positive attitude is coming back to the market.
Yes, and I think one of the reasons we're so cheap, 0.15 price to book ratio or less, is the political risk in Nicaragua, which people are familiar with. And that's all in the share price. And one of the things that happened recently was 4 weeks ago, the 220 political prisoners were released. They flew them on a plane to the United States. So that's an indication of a thawing, an improving of relationships, if you like. And possibly the worst is over, so from a political risk perspective for Nicaragua. So we hope that also attracts more people to take another look at the project.
Yeah, because it is a great country.
It is, and it's very, very underexplored. And Caliber is doing 100,000 meters of drilling a year. They're getting everything permitted. And that's what this project needs. It needs someone to put 100,000 meters in to get this up to 5 million ounces. And we just haven't had the luxury of that cash. We know where to drill, but the work's ready for
Okay, super. Well, Mark, thank you very much. Let's hope that the process really works into the favor of you and also your shareholders. And I mean, you have a great project and Nicaragua is great. So I think you have all the ingredients for big success.
Yeah, I hope so. And thank you for your support over the last 12 years.
Yes, I'd love to do so. Thank you very much, Mike.
Thank you.
Yeah, ladies and gentlemen, it was Mike Child, the CEO of Condor Gold. And you heard it. We have interviewed Mike a lot of times now. The company is in the sale process and the stock price has risen, thank God, in the last few months really significantly. And they have 9 non-binding NDAs already signed now. It's time to move to some binding, binding NDAs and binding agreements, hopefully then. And I mean, gold and silver are rising, and it looks like that this might be on the right time maybe to have a look on Condor Gold, as that might be a very short-term takeover speculation here. Thanks for watching us, and bye-bye from Switzerland.